Cool. Glad you guys can hear me. And again, our topic is deciphering mainstream information. And what we'll do here on this call, we have various traders on this call. Myself, Nody Frady's a crypto educator. We got Jay Adams, Forex and indices. And we have Anointed Ali, who will also be in cryptocurrency. So again, today's topic is deciphering mainstream information. And just to kind of give a definition on what mainstream information is, go ahead and maybe in the chat, give some ideas on what mainstream information is. So one that comes to my mind is news. You know, we watch news every day. You hear news about the markets, you hear news about crypto, you hear news about the economy, you hear news about stocks. Also education, right? You know, what are we getting educated on? Whether we go to school, whether it's just, you know, general informations that our parents might teach us or our friends might teach us. Other information that I believe is mainstream is like social media. What is social media telling us? What is the next Instagram guru telling us about trading? And how should we interpret those things? So I was just going to kind of do a few touch points on each of these. And we can kind of break these down, bounce some ideas back and forth. But the first thing I want to start on is when it comes to mainstream information is the news. So this was a tough one for me because it kind of felt like it was a back and forth. I would hear news, I'd see the market either go up, I'd hear, you know, say good news and see the market go up. I'd also hear good news and see the market go down. So really, how do you interpret news? I think there's various types of news. One of the main things I want to talk about in terms of news is more often than not, when the news becomes available to just the general public, a lot of the times the news is priced in. You know, that news before it gets to us, like say it's Elon Musk buying more Bitcoin, or Elon Musk promoting Dogecoin, or a new country's adopting Bitcoin. So many more individuals are going to know about that news, especially people who have access to quicker information like insiders. And they're going to act upon that news often weeks or even months before that news comes out. So the first thing I want you to think about when it comes to news is that news already priced in? I think that's really, really important because a lot of times, like for example, when we saw Elon Musk talk about Dogecoin on actual, you know, Saturday Night Live, right after that happened, the market sold off big time. And reason being is a lot of people knew that before and they bid up the price before. So everybody who was in was already in. It was mainly, you know, the non-savvy investors who got in after that. So that's a big piece is when it comes to news, think about, is that news already priced in? Another thing is that a lot of people don't understand is our news outlets, they're made to create an impact in the markets. They're made to seem like they know what's going on. But really, the news has all these stories that they can attribute to the market. A lot of times, the public, even the news, they have no idea what happened to the market. Some of the greatest crashes in history, even our big, you know, bear market, crypto bear market, a lot of times, the news didn't even tell us the real reason on why the market was selling off. Before finally, after the market really took a dive, they had an idea, you know, talking about the war on Russia, inflation, interest rates. So what you're going to often see when it comes to mainstream news is that they just have a group of articles that they're going to use that closely matches what they think happened in the market. If the market went up, they're going to choose the article that's the best news. If it went down, they're going to choose an article that was the worst news, but what's the most, you know, viral. So it's not necessarily that the news is giving you exactly why the market even moved how it moved. They're just picking an article that makes the most sense. So I'm going to talk about some news, and I think we'll just stick on this topic of news first, then we can bring it around to other ideas. But I think there's two pieces of news that you kind of got to think about. News that's more like hype, that's more like developments or companies getting into the space or new products, countries getting into the space. I often find that news is often priced in and is temporary. For example, like the Bitcoin spot, futures ETF. There was a lot of hype behind that, but once it was implemented, there was a huge sell-off. Or like Elon Musk saying that he promoted Dogecoin. There was a lot of movement up to that, but after that news, it sold away. I think that kind of news is often priced in beforehand and is often temporary. Now, to the contrary, I think there's more permanent news as well, and that's like your economic news. Understanding like what is happening to our interest rates, what's happening to our monetary and fiscal policy. Are they in a contractionary state? Are they trying to make money more difficult to spend, more difficult to get? Are they increasing interest rates? So you want to know whether the market is in a contractionary policy or a contractionary state or an expansionary state. I think those are very, very critical because that I've seen over and over again be the real news that's more sustainable. When we decided to go and start to raise interest rates from 0.25% all the way to 5.25%, we saw the market contract. It was contracting month over month. And when we've seen low interest rates environments, when we saw that interest rates were nearly zero for quite a while, for a few years, we saw the markets expand because money was cheap. When there was economic stimulus going into the market, where there was those stimulus checks, we saw that was expansionary towards stocks, cryptocurrencies. So I think that's the most sustainable news that you can see kind of evolve over time. So things that I'd be looking at is, what are the interest rates doing? We have interest rate decisions happening here on Wednesday. So are they going to lower the interest rate for the first time? Are they going to keep it the same? Are they going to raise interest rates? Those have huge impacts on the market that I find, and that could just be my personal opinion, but find more direct. So on that note, I'll kick it over to you, Jay, and I'd love to hear your opinion on news. What do you think about news specifically, and how do you handle news?
Yeah, for sure, Noah. I think you brought up some very amazing points because news is a driving factor to a lot of what happens in the market. I just relate it to, I'm sure you may or may not remember, Noah, but back when Trump was president here in the United States, it was as simple as a tweet he would put out on Twitter, and it would just go absolutely wild because of the influence he had, because he was the president, on the news that drove these markets and these, indexes per se, stocks, whatever it was. And, I think news has pros and cons to it. I know, Noah, you talked about I would say more so the pros, like using it as an influence to see if prices will go up or if prices will go down based on like interest rates decisions and that stuff. But I want to talk about the other side of news where it's like, most people are kind of, it's like the sheep just going through the herd. It's like they hear something on the news and they're like, oh my goodness, I got to sell my 401k because they're talking about recession and all this other stuff. When in all actuality, that part of the news is made to instill and drive fear into people. So they do that. So then on the flip side, institutions, banks, hedge funds, all these people buy up what you sold at a discount. So it's kind of like, how I look at news, you have to look at both spectrums of it. It's like, okay, well, if they're going to increase interest rates decisions, what's the other side of that? And how am I thinking mentally as a hedge fund or as an institution on how to take advantage of that? So it's like, if I was a fund, would I want to see price liquidate low if I'm expecting price to go high? Or if it's a negative news event, am I expecting for, the first news event to liquidate high and then start shorting low? And this is how you have to start thinking about it, is because, it's like a lot of fear is out there. I saw something, I know you would know more so on this, on the crypto side. It's like, JP Morgan is against cryptocurrency, and they're like, oh, cryptocurrency is bad and it's never going to last and stuff. Meanwhile, because of that news event, everybody starts selling their XRP, starts selling their Bitcoin, starts selling their Ethereum, starts selling everything because JP Morgan says so. And on the flip side, JP Morgan is buying all that crypto that you just sold. And now you have all these people like BlackRock and all these other things and, buying it up because people sold the supply. At the end of the day, guys, news is a driving factor. Markets are a driving factor of just supply and demand economics. It's as simple as that. Once you understand how supply and demand works, not just in traditional businesses, but in this industry, then you'll be successful. because in the understanding of if everybody else is selling their crypto, well, guess what I'm doing? I'm buying crypto because I know that the major institutions and stuff, even despite the news, are buying crypto because everybody is selling it because of the supply and demand. It's the same with, what was it? It was China, Noah. They're like, oh, Bitcoin's banned or this and that. And everybody had to get rid of their Bitcoin, and then China bought all the Bitcoin. It's like, you know what I mean? So there's pros and cons to news events, and how to decipher that is essentially understanding, like, yes, there's positive correlation with the fact that if interest rates are, you know, increase and stuff like that, you know, you may see drops in the market, all of this stuff. But then there's the other side where you have to think mentally on why they're putting that news event out there. Why are they saying there's, oh, we're going to go to war with this country or that country, or there's talks of this, or there's talks of recession? Why do you think that's happening? You know, and on the flip side, as an investor, as a trader, we look at that and we decipher that to say, well, hey, if they're instilling fear into the markets, they're instilling this fear-based, you know, news into, you know, typical society. Well, we understand that there's a bigger play at hand where they're just essentially driving the market down to buy prices lower and get more of the supply at a lower discount. And that's how I look at news, Noah. So I just thought it was fun to touch on that. I don't know if you had more to go into that or not.
Yeah, I love the topics that you spoke about there. I think the first one I'll just touch on is the sheep. Is one thing you just got to know, and it's just a fundamental basis of knowledge that you have to know, is the majority is often wrong. If you just look around, you know, what's the average, right? The average is not wealthy. The average is not healthy. You know, the average is not happy. So you can't follow these averages. So wherever you see just kind of a quick point, wherever you see a big majority of averages going to, you kind of want to be at least hesitant. Sure, the market can go above or below that, but usually it's the market's not going to be on the right side of the average. The market's going to be on the right side of the few, because the few are the ones that end up getting the money from the many. So I thought that was a really, really powerful point. And then how you're touching on how big money reacts to news. So you got to understand about big money. They need liquidity. They have all this money, but who's gonna? So, for example, if I said I have $1 billion of product, and I just go to everybody on this call, could I sell my $1 billion worth of product to everybody on this call? I mean, we might have enough people who have enough wealth on this call to buy up my $1 billion, but the odds are slim, right? Unless we have some crazy whale on this call. So what they need is they need to open up a lot of liquidity to make major moves. So say the news is actually very, very bullish, but oftentimes we're like, why is the market selling off? Why is the market hitting my stop loss? Well, the reason being is the major institutions, they need to shake people up. They need to get stop losses triggered. They need to introduce liquidity into the market. They need to get people fearful. They need to get people greedy so that they can actually either buy from them or sell to them. So that's a big reason why you'll see the market often move to the opposite side and fake people out so that they can aggressively bid the price in the direction that they want to go into. So I thought that was a super good point as well. And this kind of adds to this point is, you know, the powers that be, they may say something, but what are they doing? And I think that's a huge piece that Jay was kind of saying. Is like, you might hear, say, BlackRock a few years ago say they want nothing to do with cryptocurrency, or JP Morgan to say they want nothing to do with cryptocurrency. But it turns out, well, look at that. You know, BlackRock is opening up an ETF. We have all these Bitcoin ETFs opening up. We have crypto regulation opening up. So it's like, wow, all these people that were saying that we're just using crypto in this instance, we're saying was negative, that's what they're buying. One thing that I found crazy is, I don't know if you know this, you guys, but in the 1930s, gold was illegal to hold at some point in the United States. Everybody said that you had to return gold to the government to help save the economy. And this isn't the exact same thing that's, say, going on today or anything like that, but everybody just gave back their gold. They just gave back their gold to the government because they were doing a buyback. But the price of gold, I forgot what it was back then. I'm sure like well under $1,000, probably under $500 an ounce. And now it's $2,000 an ounce. It's like, why were they buying gold? You got to ask these people, why are they buying Bitcoin? What is their motives? And I think that's where the fundamentals, like Jay was saying, supply and demand. What is happening to, say, Bitcoin right now? Are people buying more Bitcoin or less Bitcoin? Well, people are buying more Bitcoin. Well, in the news, what are people telling you? Don't buy Bitcoin. Well, it's changing now, but it used to be don't buy Bitcoin. So I think what they're saying versus what they're doing is huge. Just like China, they're saying Bitcoin's illegal, and they have a huge supply of Bitcoin. So I really, really love those points. And I'll go on to another piece here that I think is important is what we're taught about investing. This was huge for me because I went to school to be a stock trader, and they didn't teach me anything about trading. I went to school for 5 years, college for 5 years, and they pulled up a chart one time out of the 5 years for 20 minutes. I was floored. I was like, how on earth aren't they going to teach me about trading if that's what I'm going to school for? They told me to get an internship. At the internship, they just told me to get coffee. They didn't want to teach me the ins and outs. I shadowed people on the floor of the CME group, and they didn't teach me anything. They just had me watch. And I was like, what is going on? And what I realized was the skill of investing, the skill of trading. This is a skill that has been held to a very few select groups of people forever. It's been held on Wall Street forever. If we all knew this information, we probably wouldn't be that productive. That's my assumption. We'd just be clicking buttons. But, if we all knew this information, we'd have access to capital pretty much all the time. And I think that's not economically feasible. So it makes sense for that information to be secluded. But in today's age, now that we have groups like Driven where we can give back that information, where I think that's like my big vendetta, I want to give back that information. It's what information really was like false. What information are you taught all the time that really gets you in trouble? So I'll give you a few that I have here that I think is just a good example of what leads us down the wrong path. For example, we're told to buy and hold, right? That's like the main information we're told about stocks, right? Usually, crypto's newer, but we're kind of told that as well. But buy and hold, always go for long-term capital gains, buy and hold. But what they don't tell you, if you looked at the top stocks, say 30 years ago, the top 100 stocks, or you could even say in crypto, just a few years ago, if you looked at the top 100 cryptocurrencies, what amount of those are on the top today? And 30 years ago, there's about 3 stocks that were there 30 years ago that are today the top stocks. So you're already misguided to think that what you're investing in, say, today is going to be here tomorrow. You have to have that mindset of it might not come back. And there's stocks, there's coins, there's companies that just don't come back. I remember Cisco, a huge performer in the market. I believe it's been down for 16 years, one of the top stocks out there. And still at an all-time high. So you could have your money in drawdown for 16 years. I'm using stocks because cryptocurrency is still new, but this is mainstream knowledge that can get you in trouble. Another piece that kind of adds to this is what we always taught as well is buy low and sell high, right? So big mistake we get into as investors is we see the prices of, say, a stock going down or a cryptocurrency going down, and we're like, oh, it's low, let's buy. It's low, let's buy. Well, what if that stock just keeps going lower? What if that cryptocurrency keeps going lower? Again, there are coins, there are stocks that don't come back. There's a bigger degree of knowledge that you have to understand because we're just taught if you hold forever, you're going to be rich. That's not true, unfortunately. That's a big piece of misinformation. Another one you probably hear is don't sell because you're going to get taxed. You're going to get short-term capital gains taxed. Well, in other words, short-term capital gains tax means that you're making money. That's a good thing, right? And you can actually just simply at the end of the week, at the end of the month, you can withdraw from your profits and put your tax money into your tax account. But what we often do is we're taught not to sell for long-term capital gains, and we get stuck. We have all these gains. We're like, oh no, I don't want to pay those taxes. But then the market goes down, goes down, goes down, goes down, goes down. And sure, we get to maybe write off a capital loss, right? But that's losing money. That's not fun. You can write off taxes, but that's losing money. So this whole thing about not trying to get taxed can actually work against you. It can work for you. I'm not saying that it can't work for you, but these are big things where people get caught because of mainstream information. And a few things as well, just simple moving averages. Very, very simple, common knowledge things that aren't so common. For example, when the crypto market broke its 200-day moving average, which is pretty much on every investor's red flag list that the bull market is over, when that breaks below, everybody just kept saying it's going to come back. Crypto's bullish. Don't worry about it. When all institutions are out, do you know how much outflow that is? Or when price breaks above 200-day moving averages, or when a price is riding above a 20-day, or when it breaks below a 50-day. There's so little information on the basics, the basics, like in fitness, like what's a protein, what's a carbohydrate. These things are basics of fundamental knowledge that you need to know to get into investing, but we get into investing without knowing it. And I think that's why Driven's so powerful, is you get to know these things. So I'll go ahead and pause there and give it back to you, Jay. Are there any main investing pieces of knowledge that you were taught? Like I remember getting into stocks and I was like, all right, you just buy low or whatever, or trading even. Maybe you can touch on day trading and that kind of stuff. Like what are mainstream Instagram or just like basics knowledge that you believe is just totally misleading?
Yeah, I want to touch on what you said. Obviously, I don't know. I just remember all throughout school, I wasn't even taught. We weren't taught anything about financial markets, investing, nothing of the sorts. So what that did was it instilled into a lot of people in society the fact that they need to go to college to have a finance degree, or they had to do, go to Wall Street to work a job, or any type of, big trading floor. That's how I thought of trading when I first got to it. I had my older brother. He's 5 years older than I am. And he went into, we lived in New Jersey at the time. So of course, New York's right there. Red Bank is another kind of subsidiary of Wall Street, where some people went to Red Bank and did trading and all this stuff and options and things of that. And I always thought you needed to have $25,000, $30,000 to just, invest into, even be a trader. And I was like, not a lot of people are able to do that unless they go get a loan, which is very risky, which I suggest, not to ever do. And the things of that sort. The other aspect of, being an investor that I was taught growing up was, you'd have a job in the union or some type of teacher bent where there's benefits and there's pension, 401ks, where, a portion of your money just automatically was put into an account that you had no control of, but you just put your trust and faith into a investment advisor to do the buy and hold, essentially. Whereas you just, we're just going to put in this index and that index, and we're going to decipher this amount to this amount. And you're just going to, in the next 30, 40, 50 years or whatever, we're hoping and projecting it'll be, by the time you retire, you'll be getting a deduction weekly of this amount, this amount, this amount. That's what we're grown up to think of. And when you look at it, and it's kind of maybe off news, but they still use that type of, what's the word I'm looking for? That type of teachings in news to instill fear and to say, well, you should trust your IA, or you should try, all these things, right? They're still doing it in the news to say, well, to make it confusing for the average person. So they keep doing that, and they keep following this just redundant system of, I need to go get a job somewhere. I need to get somewhere with benefits. I need to get somewhere where they're putting in my 401k. And it's just a cycle of life I feel is not life. And then once I started, understanding hey, my friend, I just made money from my phone. I was like, how'd you make money from your phone? Oh, I'm trading. I was like, don't you need $25,000 to get invested trading? No, it's Forex. You can invest with little $50. I'm like, what, $50? I was like, why weren't we taught this in school? Why weren't we taught this anywhere whatsoever? And it's because, again, it's a con to what the news and, what they want to, preach to people. And, because everybody's watching TV. It's all a program, right? We're watching TV, and what we see on the TV is we expect to be real life. It's not real life, guys. Some of this stuff, yeah, it can be real, when things happen. I'm a person of, I believe it when I see it. And it's not just seeing it on the news, it's seeing it happen out in real life. And what I've always known and what I've seen over the last almost 10 years of being an investor and a trader is that most of the time, what they're putting out there is completely opposite than what is actually happening. And for example, I just love using this because it's, in current time, perfect example is all of crypto. This crypto's bad, this and that. Oh, don't invest in Bitcoin. Why? They're buying up all the Bitcoin. XRP, boom, and then XRP gets a lawsuit, a couple years ago, and then XRP goes down. Everybody's selling their XRP. Oh, crypto doesn't work. Blah 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 blah. All this stuff, and then now you look. Oh, it's cleared. From the SEC. Oh, and then the value goes up out of nowhere. Like, guys, you understand that it's all happening for a reason, and what they're teaching you on the news is really not what's happening. Again, I'm not saying everything. Some stuff, yeah, but in regards to investing and things like that, yeah. The touch on that, I think it was, I wrote something down as you were talking, Noah, is understanding news comes around an understanding market cycles, okay? Do you realize, and now, especially for me being almost a decade in the game of being a trader, and some of you guys may be new and stuff like that, but you notice there's always a market cycle that is happening. There's always a high, there's always a pullback, some type of pullback, there's always a trough or a low, and then there's always a next high, right? And I'm not saying that's always what happens, but I look into terms, and let's just relate it to crypto because I think it's the easiest. Okay, well, nobody knew what crypto was before 2017. And then all of a sudden, 2017, Bitcoin goes up to 20K, and everybody's talking about it. Bitcoin from 20,000 all the way down to like 3,500 or two. It was around that area. It's like 2,000 to 4,000, right? That's a big decline. And all in that lows, people are saying Bitcoin's done. It was a one and done thing, pump and dump, et cetera, et cetera. And then what happens in the pandemic? And then towards the end of 2020 into 2021, well, Bitcoin goes from that 4,000 all the way up to 60. So wait, you mean to tell me what from basically nothing to 20 down to 4, went from 4 to 60, and now it's back down to 30? You see that there's always market cycles happening in relation to investing. The same holds true for the SPX, index, any index that you look at. Well, what do you think the pandemic really was? I'm just going to put it out there and be real. If you're going to be mad at me for it, well, at least I'm just, again, this isn't financial advice or something like that. But what do you think the pandemic really was? Well, at that time, the market was seeing the highest highs it's ever seen in existence. So based on market cycle theory, what needed to happen for those mainstream investors to pretty much get more of the supply? They needed to dump the market. Okay, well, there may be some truth to the pandemic. I'm not saying there wasn't, but they used that news to instill fear into people all across the world to do what? To sell everything they have, to hold on to it, despite desperation of, oh my goodness, there's a pandemic. I'm not going to work. I have my investments. I need to liquidate everything so I can have money to pay my bills and keep the roof over my head. And that's what most of people, and that's what happens. And then what? Oh, here's a $600 handout from the government. Is what we got in the U.S. I don't know what happened across the world, but I'm saying, here's $600. What is $600? Honestly, what is $600? One car payment? That's not going to help people. So what did people do? They were withdrawing their 401k, their pension. They're calling their job saying, I need to get all this. And what happened? The market showed a huge decline, but it pulled back to a certain level, and then it went even higher in 2021, all the way up to where it is now. Exactly. Brandy said it's the biggest transfer of wealth. Exactly. They used the pandemic as a major news event for month after month after month after month after month to make the biggest transfer of wealth in current day modern society. So it's like, I'm not saying don't always listen to the news. I'm saying decipher it precisely. I'm going to say, ask the question of, be on the other side. Put yourself in the mindset of, if I'm them, what would I be doing this for? Why would I be releasing this news? Why would CNN be releasing this news? Why would Fox be releasing this news? And who's behind those corporations to say, why, what do I need to do to essentially do that? And then you can use that to your advantage to say, well, let's just say Jerome Powell and the Fed is, doing something, right? Well, I'm in an understanding if the market's at highs, and when the news event first comes out and they push it higher, I'm in an understanding if it's a negative news event, that market's probably not going to go much higher than where it is. So now I understand that that's a liquidation event that is happening at the news release. And what that's made to do, again, what Noah said, is liquidate people out of their positions, et cetera, et cetera, et cetera, scare them out, have people cut profits. And then what happens? Market dumps. We've seen it also before with a positive news event. Oh, they're slowing down interest rates. And Noah, I think you're actually on the session with me and Corey, you know, when we were like, look, oh, positive news, they're slowing down interest rates, yada yada, and we saw the market dumping. But what did we do? We didn't sell. We weren't getting into it. Like, oh, they're dumping this market on a positive news release so they can scare people out and then buy up when it hits the low. And then what do? We saw the trigger on the low and we caught it and it liquidated the next high. So it's kind of like, you know, you use it to your advantage and stuff. So I just wanted to touch on that. You know, obviously in school, they really don't teach you this stuff, which is okay, because that's why you have things like this and, you know, like Driven and what we teach you. But on the flip side of that, understanding market cycles is there's always a means to a way. So I don't know if you had anything to touch on that, Noah, or anything, but
absolutely.
Yeah,
I think that's such a powerful topic. I think just one of the things that I see often is just the difference between mindsets of say the rich versus the poor when it comes to things like market cycles. For example, I met one of the richest people in Las Vegas a few years ago, and I was talking to him about investing, and he tells me, I cannot wait for the bear market. I was like, what? He goes, yeah, like I need the bear market. He goes, I'm taught to never invest in a bull market. I only invest in a bear market. Can you believe that? That I bet right now that sounded shocking, yet so sensical. Rich people are taught to never, just like their kids. This is the transfer of knowledge from rich to rich. They say, son, never invest in a bull market. Invest when the blood's on the street. That's common rich people knowledge. They get excited. I remember he was so excited. He's like, I think there's going to be a bear market. I can't wait. I was like, what do you mean? That sounds so weird. Because, you know, it's the common knowledge that's the false knowledge. We're waiting for this bull market, but we just had this bear market. That's where all the money just made their future money. So you have to understand how important that mindset of fear versus, you know, what's really happening. Another thing that I think is a huge piece of mainstream information or mainstream ways of thinking that is critical to success is when you are in fear. I truly believe the biggest mistake we make when we are fearful as a collective is to start to look to one another. One of the biggest mistakes we do is when the market, the world is in fear. What do? We get afraid. We go, hey, I'm not going to trust me. I'm going to trust everybody else. I don't know if you guys have felt that way before, but you start looking, you go, you know, the crypto market's crashing, go, hey man, are you selling? Why aren't you trusting your technical analysis? Why aren't you trusting your risk parameters? But you're going to start to ask people when you're afraid. And that's one of the biggest mistakes we make is we decide to follow the herd when things are fearful. We decide to make simple decisions when things are difficult. And as a matter of fact, simple decisions are actually the worst decisions when things are difficult. We're taught the contrary. When things are difficult, that's when you have to be the most yourself and make the most complex decisions. That's how you survive. It's the people when the market dips, they're actually starting to pump as much money. They're taking as much risk as they can as the world is saying it's going to collapse to get into positions. And I'll say this story over and over again because the perfect story is when the pandemic happened. What was happening to all assets? All assets were going down they were tanking down. As a matter of fact, one asset stood out to me the most, and just understanding the psychology behind it was mind-blowing to me, and that was oil. If you guys remember, there was an issue where so many liquidations happened for oil that it went to literally $0 for a barrel of oil, or was some crazy small cent amount, basically zero. And then we all got super afraid. This has never happened before. Oil going to zero. Do you know what everybody did? Everybody didn't stick to their own investment thesis. They didn't stick to their fundamentals and say, hey, we all still need to drive to work. We all still need all these products that are made with petroleum, but oil's at zero. Oh yeah, we're just never going to use oil before. So we'd go on Twitter. We'd ask our friends. They'd all across Twitter, it said, don't buy oil. Don't buy oil. It's going to zero. We're going all EV. What? Like that? So what I did was I just stuck to myself. I decided to put, I forgot how much it was, like $1,000 into oil. It went up 500% after that. But it was the feeling that was different. I felt like an idiot. I felt like a loner. I felt like a loser. That's the feelings of being on the right side of opportunity. It really is. So I think it's a key thing to know when you see fear, that's when you need to stick to you. The masses are not going to help you out in that situation. We'll go to the opposite side of it, and we'll talk about greed as well. This is another piece of mass knowledge and mass psychology is greed. So I don't know if you guys know this feeling, but really try to walk into this feeling is when everybody is so excited on how much money they made in crypto or any investment, GameStop, it's all over the news. They're just like, wow, this is amazing. That's what triggers the average person on the opposite side of fear into greed. And that's, again, where you start to look to the masses. You go, oh, Jimmy's buying, this guy's buying, look how much they made on this. Well, think about it logically. If somebody is talking about how much money they made, what does that mean they had to have done? It means they had to have bought earlier and are selling right now. That's the only way they could have made money, is they bought low and they're now selling high if they're long in the market. So you have to interpret that. But what we're taught to interpret that is, if they've made money, I've got to make money too. So I'm going to try. I'm going to gamble it. But often they're taking profits. It's by definition, they are taking profits. So you have to understand greed as well. Another one is hype. I cannot tell you how many people still get caught in the hype in this industry. It's wild. You got to understand a very key word, and it's called a conflict of interest. Conflict of interest. We get fed hype all the time in this space. Use this broker, buy this coin, buy this stock. Well, why are they saying that? You have to ask the question, why are they saying that? And most often the time is because they have a vested interest. The person that's saying, buy this crypto, buy this crypto, buy this crypto, what if they're one of the top holders of that coin? What if they bought before the public even had access to that coin? Most often the person that's saying, buy this stock, buy this crypto, it means they own that crypto. And by definition, if you don't own that crypto, they bought that earlier than you did. And you can actually be their exit liquidity. You can be the buy to their sell. They're marketing it to you to sell it to you, to either bid up the price or to sell their position to you. Another thing is brokers. Why are they asking you to be a part of their broker? Well, they probably get commissions and they probably have ownership in that broker. So we keep saying, like, look at how much money this person's making on the broker they own. Well, that's a huge conflict of interest. Sure, it might be a good broker, but you have to understand the conflicts of interest. Hey, I'm making money on this bot. I'm making money on this investment fund. Well, do you make commission off that bot? Do you make commission off that investment fund? That's a conflict of interest because it might actually not be that good. It might actually not perform the way they're telling it it's performing. It may be riskier than they're telling it how risky it is because they get money. So hype is another piece of this mainstream stuff we do that we just keep making mistakes for. So understand fear. You have to stick true to yourself. Understand greed. You have to stick true to yourself. Understand hype and understand the conflicts of interest around hype. Really, you want to see people that are not associated with things, or if they are associated with it, you have to do enough due diligence to know if the claims are legit or not. So I'll go ahead and pass it over to you, Jay, on that note when it comes to maybe just what mainstream, info people are telling you to do.
Yeah, for sure. I mean, I wrote down some points that you went over: greed, conflict of interest. The other one I got for the first point you made was comparison, and other people are investing in certain things and stuff. It's good to take a look at it. You always have to do your own due diligence, right? And this is something that saved me a lot of money because, and I'll relate it back to 2021. And I love what you talk about, Noah, whereas, and tying in the conflict of interest is a lot of these new coins and these, meme coins that were coming out were backed by individuals and celebrities and et cetera, who had a vested interest in that to say, hey, you should get this. And people got excited because they can potentially make a bunch of money on it. And then nobody knew when to sell it. So what happened was that essentially a lot of people were their liquidation event. Whereas if you did your own analysis on it, right, you would have seen like, okay, should I really invest in this if it just had a pump up, 5,000% or 200% or whatever it is? Should I really get in at this point, or should I wait for any type of discounted price essentially before doing that? I think it's super important is to not jump so much into comparing what other people are investing in, right? It's like when XRP just passed was it last week, Noah? It was like last week or some sort. It went from all the way up to 80 some cents. And then they're listening to all their friends, get XRP, get XRP, get XRP. And it's like, why are you getting it when it's at 87 cents and it runs a risk of, dropping down? Yes, it's good to invest in it, but wait for some dips to occur. Wait for some, people to close their positions, because that those people are going to close their positions. You have people holding XRP for years and years and years to get to the point where it was there 87 cents, essentially clear it out. So it's like, don't always use that comparison. Do your own, fundamental technical analysis on that aspect of comparison. Use it as like a, to bring it to light. That's why I like societies like this, like, like communities like Driven, because we can tell each other kind of like what we're looking at. But it's up to you to do your own due diligence to kind of say, should I really be getting in at a high? Or is a low a better time to get in this? Is the news talking about this aspect, and how can I decipher that into, putting my hard-earned money or investments into this asset, right? And then you have the term of greed, knowing when to exit and knowing when to, essentially not invest. I'm going to take away from crypto here. I'm going to say greed is a reason that a lot of people can't succeed long-term at trading. Forex, trading, futures, trading any type of asset class is because of greed. And here's why. Because somebody will get into something and, they'll like, and I see this a lot, even to when I'm teaching, it's like, you just made money on a trade, right? Let's just say the S&P-X just went up 50 points. You caught it on a live session and stuff. And then later on in the day, it's like 2 o'clock, 3 o'clock or something. And you think it's a good position for SPX to get into again. Well, you just made maybe, let's say 2-3% on your first trade of the day, or, the beginning first session of the day. And you have the feeling to want to execute more positions that day. That's just greed at that point. It's like, when can I pull back? When can I get in again? And I see this a lot on sessions. Like, when can I get in again? When can I get in again? Oh, I caught the move. I caught X%. I'm looking for a re-entry. For me, I'm kind of like, if I'm making 2-3%, if I just caught that move, I'm chilling the rest of the day. I'm not even putting my money to work in the market the rest of the day. And it's not to say, because there's not an opportunity. I know that through experience in my trading plan is I'm going to understand that, hey, let's take this aside from the equation. Let's use what we have and let's take greed out of it, because greed is the one thing I believe why a lot of traders fail to succeed. It's the same reason that, greed can come in the form of like this. Has this ever happened to you where you have a hot streak and you're like, oh, let me risk 0.5%, 0.5%, and you get like 5 wins in a row. You're like, dang, this is pretty dope. I'm going to go up to 1%. Then you hit the next 1% trade and it clicks. You hit 1%, boom. You're like, oh man, now I'm going to go up to like 2%. And you're like, oh, you win that one. Oh, you lose 1-2%. Okay. I'm going to, and then like you hit this hot streak. And then before you know it, you're like, you know what? This is the perfect setup. This is a 61.8 pullback. Boom, it's on a support line. Let me buy this thing. Let me go 5%. Let me go boom, boom, all whatever you want to do on this trade. And that's the one that's a loss and just eats up your entire profits that you just were made for the last 2 weeks. That, guys, is greed, right? So it's understanding, and I know this is aside from news, but I'm just touching on the points you touch on, though, is how to use this to your advantage. I see a lot of traders, especially when we first started out trading, for me anyway, is that they always use news as a way to flip accounts, right? It's like, news is coming. I'm going to put 100 lots or 10 lots on this thing, and I'm going to flip this $100 account or $1,000 account to make 10K real quick. And it's like 90% of people ended up losing it every single time they tried to do it because they weren't understanding liquidation events. And it's just like that's greed, guys. That's greed. I see traders who do that aren't still trading today. Actually, I would say, 80% of people who are doing that 5 years ago are not trading today. And I say that to say this, guys, is that, if you want trading to be your long-term, life, career, whatever it is, I'm just putting facts out there. Where else can you go to have this potential upside potential in learning a skill set? What other skill can you learn for this potential upside gain? Okay, you need to ask yourself that question. Am I going to go get a career job? Am I even going to go work on Wall Street? I saw this thing on Instagram the other day. What was it? BlackRock was hiring. What was it, Noah? It was like 300 new traders or something, right? And 60,000 people applied for that position. They need only like 300 positions, and 60,000 people applied for those positions. Okay, let's say I'm one in 300. I'm a member of 300. I'm with BlackRock, whatever. I'm a trader on BlackRock. Well, how much are you getting per year, right? Maybe 150,000 to start. That's most of you may say good. Okay, well, that's good. That's good money. Yeah, it is good money. That's fine. What about the next 5 years? What's your potential upside momentum where you're off trading these billion-dollar accounts and stuff, and you're not seeing pretty much any of that because you're a career-based position, you're a trader, you're doing all the hard work and due diligence. They're like, yeah, we'll pay you salary, right? Where else can you go? So using that in the back of your mind, that's what I use, because I said to myself, where else can I go travel? And let's say tomorrow I wanted to go travel to London, or I wanted to go travel to Italy. And I'm like, okay, I'm on a plane tomorrow to go to Italy. Okay. And then when I'm in Italy, I can still do my work and I can still trade and make money while I'm taking that trip with my family. Loved ones, whatever I want to do, right? Isn't that what life's about? It's about being free, it's about having freedom to do what you want. So I always had it in the back of my mind was, where else can I go? Now using that aspect, if greed is the number one killer, most toxic thing in trading, why do I continue to have greedy capabilities or have these greed ambitions? I need to flip my account. I need to take this $100 account, man. I'm going to take it to $1,000. I'm going to use that $1,000, get a funded account, blah, 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 blah. Like, no, you need to stop. Crypto's going to keep going up. How many people do you know bought these meme coins and like, man, I just bought Safe Moon. I put $1,000 in. Now it's at like $30,000, man. This thing is going to go to the moon. I'm going to make 100,000 on this thing before I liquidate. And then what happens? Everybody started liquidating and it just went down like, oh, now my 1,000 is only 2,000. Well, you're at 30. Well, now you know the difference that you could have had. Happened to me on a few things, right? It happens sometimes. I get it. But at the end of the day, now using this knowledge that we are giving you guys, right, is understand that, okay? And yeah, that's pretty much all I have. I know I kind of went off tangent with news and stuff, but it's all relative because there's still like news is an indicator of events to come in the market based on your technical and fundamental analysis. So I'll close on that, Noah. And then, yeah, so. Sweet.
So I really like the point you made about expectations. And I think that goes along with the greed is you got to watch out who you're paying attention to, because if you are fed the right information and really, like Jay said, trading's one of in my opinion, the best. Like I still cannot find a better way to make money because the opportunity is always there. You don't have to wait for a buyer or seller. The volatility is there. It just takes a skill set from that point on from there. So after that, you got to know that what really makes sense. Like Travis says, the truth is good enough about trading, but the truth about trading is not that you're going to flip an account every week. Those people that are trying to pass funded accounts in one trade, like that's a toxic culture. I remember actually, one thing I really suggest you do historical analysis on the best traders in the world that have been documented. Not your Instagram friend, really like the Jesse Livermores and stuff like that. Like start to look at what returns actually are real. Look at what the actual hedge funds perform. Like look at what even Warren Buffett, the best fundamental portfolio manager ever, I think his annualized return is like 87% or something like that. You have to understand what those numbers are and get a realistic expectation. So just when it comes to information that you're seeing, like understand when you see wins, like most people in any aspect, they're going to post their success. A lot of people aren't just going to post like how much they're losing or anything like that. So I think that's a critical piece, is to know that usually just wins are being shown. People aren't showing losses. So it's inherently a skewed data set. Also, think about marketing. The nature of us, and it's actually our fault. We think that the marketing space, we think that the social media space is like, oh, it's a tragedy that it's so falsifying. Well, who's buying it? Why are they showing up so much? Why are they making money? Well, it's us. We like seeing the person who's flipping accounts. We like seeing the person who's flashing Lambos and stuff like that. We like the person who's saying it's easy, it's quick. That's our fault. In the statistics since the history, the dawn of civilization, it has never been quick and easy to be successful. I'm sorry to say. You can go back to the beginning of humans. Being successful has never been quick and easy, yet we buy quick and easy, we buy quick and easy, we buy quick and easy, and we don't realize why we haven't made it there. And that person over and over and over again at the real top, not the fake top, says, guess what? It wasn't quick, it wasn't easy, but I was consistent. And I kept going over and over and over and over and over again. And that's one of the principles we preach here at Driven is, don't follow that quick and easy stuff. And it's okay if it's hard. It's okay, but we want to make it a little bit easier for you. That's the key. You just want it a little bit easier. You want the right information a little bit faster, but it's not going to be quick and easy. The same things. You just need this one. I think this is another piece of information that's brutal. You just need this one bot, this one indicator, this one fund you're going to invest in, this one project you're going to invest in. Yes, there's 1% or even less of people that have the success off of these one things, but most people, they have to find out what works for them. It might be multiple things. But to think that there's always this one and done, if I do this, I'll be successful. If I do this, I won't have to worry about anything ever again. You're looking at lotto winners. That's a lotto winning strategy. Eventually you might find that one, but it might take, like Thomas Edison, 10,000 tries to get that one. So you have to put it into context. Yes, one is good. Yes, that person who bought Bitcoin at whatever, less than $1,000, they probably bought a ton of other coins too. Or they were just a lotto winner and just wrote that one ticket. But that's a terrible strategy, right? That's just gambling. And a lot of us are wondering, when we get into these investments, everybody's like, oh, cool, opportunity, here's my life savings. And they're like waiting for it to sprout. It's like, you got to understand odds. Odds, in my opinion, the way I look at odds of a successful project is 95% failure. That's what the VCs do. Like angel investors, like Y Combinator, all these top VCs, they understand that 95% of the projects that they invest in will do nothing. And that's kind of a good statistic, in my opinion. Even in trading, we invest accordingly to that principle. We're investing like 1% or less on that trade, meaning that 99% of our trades are inherently losers, right? In that schematic. If we're just, looking at that, we're saying I'm only going to risk 1% of that. So think about that when it comes to the general information of, hey, I bought this and I'm successful. How many other things did you buy? Are you just lucky? And most of the times it's one of the two of those things. So I think that's, last thing I want to add, and this is a great one from Jay, is also the information about a few common barriers to entry into this stuff. We have people that are saying, I don't have enough money. I'm not old enough. I'm too old. I'm a female, I'm a male. All these things are I don't have the right educational background. This is information that is false. Our best traders here are the ones that have the least education. So the formal education. So that's not it. Smarts is not it. Like Anointed says, the market goes up, down, and sideways. You don't need smarts to be successful at this. Money. Some of the people who I've seen to become millionaires were either personal trainers, security guards, just random Joes I know became millionaires in this space. And I know so many people, especially being in Vegas, that make $20,000 to $50,000 per month and don't have $1 invested to their name. And most of them, they become completely broke once they're, whatever vocation they're doing out here. Once that goes away, they have no money. And as a matter of fact, over the last 6 to 8 years, if you would have just invested $25 into Bitcoin per week, you'd be a millionaire already. That's a homeless person could beg for $25 per week. And we're taught that we need money to make money. That's not true. You need consistency and time to make money. You need a great strategy to make money. Those are the things. This is where you can not even have, you don't even need to have a good job, and you can be incredibly successful in the investing and trading space. But it takes the things like Jay's saying. You can't be greedy. You can't be fearful. You have to be consistent. You have to be around the right people. You have to be dedicated. One thing I knew for myself, if I stayed around the investment community long enough, I knew I had to stumble across success. I knew I had, no matter what. People would make fun of me. Oh, you've been trading for 2 years and you've made no money. I'm just going to stay here. I'm going to stay where the fire is hot, because I just believe that if I'm here long enough, I'm going to get burnt by that flame, and it's going to work out for me. And I think that's one of the most simple strategies that you can have, is you don't need to be smart. I consider myself dumb. I've never been lucky at anything. And I just think if I'm just dumb enough to actually stay here long enough, things are going to be in my favor at some point. And I think that's a powerful piece. So I'll go ahead and end there. I'll pass it back to you, Jay, if you have anything you want to close with or any remarks. And anybody who's on this call, I just appreciate everybody, and hopefully you guys got some good gems.
Yeah, for sure, Noah. Thanks so much, man. I really don't have too much else to put this topic out there for the last hour, both you and I. So appreciate all the knowledge, you guys. If you guys have learned anything on this specific Trade Talks call, please put some $signs in that chat box. We appreciate you. We love you. We do this every single Monday, 1 p.m. Eastern Standard Time, always changing traders and stuff. We keep it fun. We give you guys real knowledgeable information based on real world stuff. So, I appreciate you guys. Love you. Have a great week ahead of you. We'll always be here for you, and we'll see you next time.
Peace.